Welcome to the Property Elite podcast. I'll be your host, Jen Lehman, chartered surveyor and co-founder of Property Elite. Stay tuned each week for more on industry hot topics, market updates and new RICS guidance.
In this week's blog, we look at the new RICS Professional Standard Valuation of Licensed Leisure Properties that were published in April 2025. This is important knowledge for specialist valuers, as well as for RICS APC candidates interested in deepening their valuation competency knowledge. You can download the professional standard from the RICS website. When is the professional standard effective from? It was effective from the 1st of July 2025. It was published to address market and regulatory changes over the past 15 years, to expand the guidance to cover the UK rather than just England and Wales, to make reference to the Red Book Global, and to include new guidance for non-valuers. How does it link to the RICS Valuation Global Standards Red Book Global 2025? The new professional standard needs to be read alongside the Red Book Global, in particular VPGA 4. It replaces the former guidance note, the capital and rental valuation of public houses, bars, restaurants and nightclubs in England and Wales 2020. What asset types does the professional standard cover? It primarily covers public houses, bars, nightclubs and restaurants. It does not cover unlicensed leisure and hospitality assets such as cafes and takeaways. These are trade-related properties where their rental or capital value is linked to their trading potential. How is the professional standard structured? The professional standard covers the following areas: glossary of key information, information for non-valuers. We recommend reading this for a helpful overview if you are not a valuer or you are not a specialist in the area of practice. Introduction, valuation approaches and methods, factors impacting valuation, rental valuations, tied pubs, valuations of investment property, and valuations of the purpose of secured lending. All valuers need to read and understand the core definitions in the glossary, including terms such as adjusted net profit, divisible balance, EBITDA, FMOP, FMT, and REO. We have purposely left these as acronyms. Read the guidance to ensure that you know what all of these mean. How should a licensed property be valued? Section 2 explores the appropriate valuation approaches and methods that you should adopt when valuing licensed property. Typically, the income approach and profits method is the most appropriate. This will also include the use of the comparable method. The 4 key steps in using the profits methods to calculate capital value are: assess FMT generated by REO, assess potential gross profit resulting from FMT, assess FMOP based on costs and allowances reflecting the REO, and then calculate MV by capitalising the FMOP at an appropriate rate of return, or market-based multiplier. Section 4 looks at rental valuation specifically, which requires the use of the comparable method. In this scenario, you will need to consider the terms of the lease, for example, demise, lease terms, user covenants, alienation, rent review, trading requirements, and wholesale supply tie provisions. Tenants' improvements will also need to be considered by the valuer. You also need to understand the term divisible balance, i.e. the apportionment between the landlord and tenant based on the risk and reward adopted by each. Section 6 relates to the valuation of investment property, which could be a variety of purposes. For example, valuations for financial reporting, which are covered by VPGA 1 of the Red Book Global and UK VPGA 1 of the UK National Supplement. VPGA 4 of the Red Book Global provides a clear definition, which you should read and understand. Section 7 relates to valuations for secured lending, which are further discussed in VPGA 2 of the Red Book Global and UK VPGA 10 of the UK National Supplement. Your advice should incorporate commentary on whether the asset provides sufficient security for lending purposes or not. What factors affect the value of licensed trade-related property? Section 3 explores a range of factors affecting the value of trade-related property, such as physical characteristics, actual trading results of the incumbent operator and small businesses, terms of trade, market conditions, market positioning, and statutory compliance. What else do I need to know when valuing a licensed trade-related property? A lot, as it is a specialist and complex area of valuation practice. However, here are some things you should consider. Special assumptions, Red Book Global VPGA 4. A, on the basis that trade has ceased, sometimes with the additional special assumption that no trading records are available to prospective purchasers or tenants. B, on the same basis as A, but also assuming the trade inventory has been removed. C, as a fully equipped operational entity that has yet to trade, known by a number of terms such as, but not limited to, day one and turnkey. Or D, subject to adopted trade projections. This may be appropriate when considering development of the property. In using adopted projections, all special assumptions must be realistic, relevant, and valid for the particular circumstances of the valuation. You should read the remainder of VPGA 4 to understand the following: definition of a fully equipped operational entity, assessing trading potential, valuation for a non-trading property, and apportionment. Section 5 discusses tied pubs, i.e. where there is a contract for the supply of drinks and other services and the pub will be occupied under a lease, tenancy or licence. You will need to have knowledge of the Pubs Code, etc. Regulations 2016 in the UK as a minimum. In conclusion, valuing licensed trade-related property is a specialist and complex area of valuation practice, and a robust understanding of the key guidance is required. If you'd like to learn more about licensed property valuations, then why not book in an hour of mentoring with our resident expert, David Brosham, MRICS FAVLP. As a member of the expert group for the production of this professional standard, David will be well placed to support you in developing your valuation knowledge and competence. This is what he has to say about the professional standard. The update reflects the RICS awareness that as time passes, advice and standards need to be reviewed to ensure that they are current and relevant. I know that all of the contributors to the update hope that the second edition is of benefit to members in this sector.
Thanks for listening to the Property Elite podcast this week. Head to our website to check out our full blog, free and paid support resources and services, free consultation for every single RICS APC and ASOC RICS candidate, and also ask us any questions you have via the website chat blog. See you next week.